It's a gold rally on this Metals and Miners edition of Sunday Night Charts here on Super Bowl Sunday. Let's kick it off with GLD, taking a look at the relative strength indicator. And we can go back to December. We could see here it got about down to 40. It wasn't quite at oversold conditions, but it was good enough to kick off a rally in price, as you can see above. And it's been holding around 50, and that's really key because you want to see on the RSI it get down below 50. Ideally down here like you see in August at 30, or nice oversold condition. And then you want to see price rally and the RSI rally above 50. And notice how it's just kind of lingered along 50, but now it's starting to break higher. Well, that suggests price also going higher. Let's take a look at the MACD moving average crossover. And what do you see? The shorter term signal is crossing, the black line is crossing the red signal. And that is, of course, a bullish indicator as short term moving averages crossover. So you've got the RSI, you've got the MACD, and you've got Momentum Timer Pro. There's your trifecta, all three conditions. Again, I'll put a link if you're not signed up for this in the corner and in the description below. Again, it's free now, and those on the list, when it does go paid, super big discount. And let's take a look at the longer term trends before we hit the chart. Price bullish, momentum bullish, above all the key moving averages. Other than 3 and 9 month momentum signals, this thing is green. And remember, it wasn't long ago, it was all red. Let's take a look at the volume profile. And what do you see? 6 month volume profile, boom, solid. The buyers wanted this, they got it. It looked there for a while that they might not be able to hang on to it. They did. Let's zoom out to the 1 year chart. And what do you see? They nailed it on the 6 month, the 1 year. How about the 2 year? Look at it. Beautiful. So what is the picture for gold here is that people are going to be drawing lines. If they haven't already, they will. And they're going to go and they're going to draw a line somewhere up here. And they're going to like that. And they're going to say, look, we have a breakout. Now their line may adjust. It may actually be starting from over here, something like that, and maybe they'll adjust it up like this. Nevertheless, they're looking for a breakout here. Why does this line or lines like this matter? It's because at this point, the bulls are trying to take charge and they need to flush out the shorts. I mean, they've been hammered by the sellers repeatedly. And notice what's happening here when they break this trend line. These sellers up here, as you can see right here around 1850, now find themselves in a lost position if they're short, or maybe they want to get back in. And so the next big target right here for gold is right where it's running into resistance. We'll zoom back in at the 6 month line. And what do we see right here? Resistance at 1870. There was a cluster of sellers here. So that is the issue for gold. It's got to get through these sellers. And as we can go back to that longer term chart, if it can break through 1870, then it comes after 1900. And then at some point, you'll notice that the selling isn't that strong. And then you get above, say, 1970, and boom, you've got it higher. Of course, if it gets rejected, well, the good news is for the gold bulls, there's a bunch of you sitting here at 1800 looking to defend. And that's what you need, is people willing to come back in and buy. Now, how about the miners? Because, what's good about the miners is they tend to lead the metals. You hear, miners lead the metals. So what do we want to see as we get into GDX? Is we want to see it leading. Let's take a look at the RSI. Relative strength indicator got down to an oversold condition in early January and mid-January. Price really didn't go anywhere, but all of a sudden it's starting, it tried to peak above 50 on the RSI, just couldn't hold it. Got above it, couldn't hold it. And now it's looking like it's making a little run at it. Price is headed higher, so it's a good sign. How about the MACD? You got your crossover on the shorter term moving average crossing the longer term one. That's pushing price up. But notice before, when the RSI wasn't really getting anywhere, the MACD wasn't that strong. It wasn't giving a lot of strength there. Now it's looking like it's trying to pick up some velocity. Momentum Timer Pro, 3 days of buy signals. So again, you're starting to get 3 consecutive signals here. That's good. Let's look at the longer term signals on the moving averages. Bullish across the board, price and momentum above all the key moving averages. It's still, and this is maybe the challenge for GDX, is it's still below 3, 6, 9, 12 month momentum windows, or it's below them, and it's not going to pick up a lot of algorithmic buying until price crosses above there. So let's go and see if we're seeing metals leading the miners, and the challenge is we're not, and that is a huge risk for gold, that perhaps even in the short term it could get rejected as it moves up, waiting for the miners to catch up. And you'll notice it's got that same chart pattern here. We'll draw the line in so you can kind of see, and we'll just cut the line a little bit lower. But it's got some work cut out for itself to break through those resistance levels. And even if we move the line down and say, look, okay, well, let's exclude this peak here, it's still got some work to flush out these sellers. So GDX has definitely got its work cut out for it. You notice here on the 2-year chart volume profile line above it. Let's zoom into the 6-month, and it's starting to get some momentum here above the 6-month volume profile. But if we zoom out to the 1 year, guess where it ran resistance? Right there. And it's hit resistance at this 1 year before. So GDX definitely has its work cut out for it. But we can see that on the 10-day view, definitely buyers are there. So there's potentially some short-term upside here. But watch gold for a potential reversal until the miners catch up. That's kind of the only concern I would see here is what happens if the miners don't lead the metals. That tells me the metal is likely to reverse. How about we head over to silver? Similar story here. December, early January, we got to an oversold condition. The RSI started to rally, got above 50, touched 70. And that's where you start to see overbought conditions. So price reversed a little bit, but it came down quite a bit, down back into the area where people were buying. So back into a buy zone. And now the RSI is starting to gain some steam again. Price is starting to rise. So that's a good sign. Let's look at the MACD. You get a crossover on the shorter term moving average. So that's supporting higher price here. And notice again, you go back to that December, early January where RSI bottom. And what happened with the MACD, of course, it's a lagging indicator as moving average crossover strategies are, and it lagged and it caught that, but then the breath just kind of petered out. And so now it's getting a second wind. Good sign there. How about Momentum Timer Pro? Started to pick up a couple buy signals Wednesday, Thursday, Friday, flip to sell. Maybe on Monday when you see the report that closes out on the Friday data, maybe it'll be back to a buy, but you got to sign up to see that. Let's look at the other indicators. Momentum remains bearish, but the good news is price is heading higher. It's above all the key moving averages, similar to GDX. It hasn't really broken out from a momentum signal. Let's take a look at price on silver and see what's going on here. We'll use silver futures just because I like that a little bit better. It's where I got my charts. Let's zoom out to the 2-year chart. And what's happened here is we had this topping pattern up here, and price came down, established a new buy zone, and then price rallied up into a sell zone, got rejected hard down. The buyers said, hey, no problem, we like buying here, we'll buy again, validating this is indeed a supply zone. This is where buyers are at. Price came up, couldn't get it, buyers back in, hey, we got more money, drove right into the sell zone. Seller said, no way, we're not interested. Notice that the sell zone where the 2-year volume profile is at. So sellers very active at 24, just over $24 on silver, and price back into the buy zone, and buyers added again. So what does that tell you, at least based on what we're seeing in the technicals and on volume profile, is there's probably going to be a run up here at the 200-day moving average. And you notice it tagged the 200-day and rejected, tagged the 200-day and rejected, and look at where the 200-day is coming down here and where the volume profile line is. So it tells you there's a run at it. So if you're short-term trader, kind of keep an eye on that, but look potentially for rejection there. If it breaks out, now what's going to happen is you start flushing out the short sellers sitting here at just under 25, and then just over 25 would be the next window, racing hopefully back up in the 27 if you're bullish, to see if the sellers come back in line there. So definitely some short-term play on silver. How about we head over to the dollar, which could be the wrecking ball for everything if the dollar breaks out. And dollar back down in late April, early May, didn't quite get down into real oversold conditions, but trended down near oversold conditions for a while, and then that sent price higher. And notice how it's trended right along 50. Yeah, sure, it dipped below on the RSI here, but I wanted to show you that 50 is still good enough to get this thing going. And now look, it's starting to try to make another breakout. It did here in January, and now in February it's trying to break higher. Let's look at the MACD. And what do you see? The shorter-term moving average curving up. You see the rate of change on the longer-term moving average starting to slow, and it's telling you that window here is looking like it's going to cross to the upside and validating price. How about Momentum Timer Pro? It's got just about 6 days consecutive short sell signals, but you see a reversal there. And what would that tell you? If you see all three confirming, well, there you know, dollar's headed higher. Let's take a look at the bigger picture. 21 and 50-day moving average remain bearish. Momentum on the 50-day is still a little bit bearish, hasn't turned yet below the 50-day moving average. Now, we know for the dollar, the 100-day is more important than the 50, but of course, rallies begin with a cross and a confirmation of a moving average, 50 being very popular. It's above the 3, 6, 9, 12 month momentum, so that's fantastic for the dollar. Let's take a look first at the trade weighted dollar picture here, and what do we see? It's trying to break through 96. It's in a supply zone. It's in a buy zone where buyers are at. Notice it's at its 100-day moving average. It crossed it down here, tagged it, looking to break up to 97 and retest there. How about we'll take a look at UUP volume profile here on the 2-year chart. So plenty of support. You see this is a nice bottom here. You see that if you draw this 2-year line right across, what happens? Price got up and rejected. Buyers came in all under here, broke out of this, looking like a potential cup, little handle pattern here potentially. Let's zoom into the 1 year. What do you see? Aha, there's the issue is over the last year, which we can zoom in and say we know it's the 6 months. Sellers have been trying to keep the lid on the dollar. If price can break through there, well, there you go. That would be the signal. And look at the 10-day chart telling you the buyers are definitely coming in here looking to take this thing higher. So the risk, of course, to metals and miners is the dollar. Now, it doesn't mean they can't rally together, but long term, well, if the dollar gets out of hand, it's not good. Let's take a look at the long bond, which is, again, just a form of deferred dollars. Now clearly in an oversold condition on the relative strength indicator, down at 30, bouncing up, price comes up. So it's telling you potential opportunity here. How about the MACD? What do we see here is the shorter term moving average is starting to bottom. Momentum on the longer term one is starting to slow. So potential crossover, who knows, maybe you take a week or more to do, maybe a few days. So watching that as a second validation point. How about momentum time pro? 36 consecutive sell signals. So when that flips and all three are confirming, now you're looking at a potential bottom. And of course you get exactly how to use Momentum Timer Pro, integrate it with your trading strategy. Let's take a look at the bigger picture. We know it's below all the key moving averages, no surprise there, but momentum, it still remains bullish below all of those key moving averages. Momentum is terrible across the board. So there's really not much to see here on the charts, but we'll look at it anyways. And we have to go out to the 2-year chart because you start to get this bigger picture. Maybe, let's go to the 1-year chart. Is all this buying down here? Well, you see this sell. Sellers just probably running out of steam here. Buyers came back in where they were before, down here. The last time price got down here and you saw a big rally, you can look at the inverse of that on Treasury yields. Last time it was sitting at 2.3 and went all the way down to 1.8, offering a potential nice return. So even if you're not a fan of bonds, the technicals are telling you to put this on your radar for sure. But again, volume profile, there's nothing there to say. It's got to break out over 139.13. If it does that, then you'll see this as a bottom from a volume profile standpoint. All right, let's go on to the energy sector remaining very overbought. Now remember, things can remain overbought or oversold for much longer than you expect, and price is still rallying higher. But are we about to see an end of this price rally? Well, the RSI is still saying you're okay. MACD is just hovering. Now you notice that the short-term moving average is now converging with the longer-term one. Will it break higher or lower? Too close to call. Momentum Timer Pro, 27 consecutive buy signals. So, the more sell signals or the more buy signals you get, the more likely is you're getting closer to a reversal. And that's kind of how you use this tool. So it's telling you, hey, everything's extended. What's the next likely direction? Higher or eventually lower? Well, it'd be lower. Price is bullish. We're seeing momentum on the 21 and 100 days slowing down. Otherwise, very clean and green on your screen. But where does XLE come to an end? Well, let's zoom out to the 5-year chart. And we broke through that volume profile that was looking like it might hold resistance. But the way you have to see it, this is where the most concentrated amount of trading volume is over the last 5 years. And these windows, these bands, these trading zones, they kind of end right at around where you see the volume start to dip in and get real thin. And so I added this line here telling us that perhaps for XLE, it's likely getting close to a reversal point and running into resistance. Of course, we would see that based on the technical indicators that are generous, showing that price, well, pretty extended. And with that, I'm Steve Van Metre. Thanks for watching. Bye now. The content of this video is provided as educational information only. It's not intended to provide investment advice. You do not have to be construed as recognition, solicitation, buyer, security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steve Van Metre or person capacity. Business expressed in this video that do not affect the value of advising or Steven Van Metre Financial.